Navigating the complex landscape of global regulatory trends in open banking is crucial for understanding how different regions adapt to and shape the future of financial services. As countries roll out various frameworks and regulations, a mosaic of strategies emerges, each tailored to specific financial ecosystems and consumer protection standards. Section 1. Key regulatory frameworks: Europe, PSD2, and GDPR. In Europe, two regulatory frameworks stand out for their profound impact on open banking: the Revised Payment Services Directive, PSD2, and the General Data Protection Regulation, GDPR. These regulations are pivotal in shaping the modern financial landscape, making it more secure, competitive, and consumer-friendly. PSD2. Implemented in January 2018, PSD2 was designed to break traditional banks' monopoly on their customers' data. It requires banks to open their APIs to third-party providers, provided the consumer consents. This directive democratized financial data and encouraged a surge in fintech innovations, allowing consumers to benefit from more personalized, convenient, and varied financial products and services. GDPR. GDPR focuses on data protection and privacy. Implemented in May 2018, its primary goal is to give individuals more control over their data and simplify the regulatory framework for global business. In open banking, GDPR ensures that financial data sharing is done securely and transparently, requiring explicit consent from individuals and clear disclosure about data usage. The synergy between PSD2 and GDPR creates a regulatory environment that fosters the expansion of a digital single market for financial services in Europe. PSD2 encourages innovation by lowering entry barriers, while GDPR ensures that this innovation does not come at the expense of consumer privacy and security. United Kingdom Open Banking Standard. The United Kingdom, a frontrunner in the open banking initiative even before PSD2, established its regulations through the Competition and Markets Authority. The UK's Open Banking Standard requires banks to allow licensed startups direct access to financial data once customers have approved it. This framework aims to improve transparency and stimulate competition within the banking industry. The UK's model is often considered an exemplary blueprint for other countries. United States market-driven approach. In contrast to Europe, the United States presents a market-driven approach to open banking, characterized by the absence of a formal regulatory framework. Financial institutions voluntarily share data with third-party applications, driven by consumer demand for more integrated financial services. While this has spurred innovation, it has also called for more structured regulations to ensure comprehensive consumer protection and systematic risk management. The Consumer Financial Protection Bureau, CFPB, plays a critical role in advocating for consumer rights and data privacy in the digital finance landscape. Asia. Diverse approaches. Asia's approach to open banking is diverse, reflecting unique strategies adapted to different economic, technological, and regulatory landscapes. Key examples include Japan. The Financial Services Agency, FSA, encourages banks to open their APIs to third-party providers, focusing on security and consumer protection while promoting innovation. South Korea, the Financial Services Commission, FSC, implemented an open banking system allowing consumers to access financial information across various banks through a single application. Section 2. Impacts of regulatory frameworks. Enhancing competition and innovation regulations like PSD2 and the UK's Open Banking Standard are transformative in their impact on the financial landscape. By lowering entry barriers, these regulations enable a more competitive environment where fintech startups and smaller financial institutions can enter the market and compete with established banks. This influx of new players fosters innovation as they bring unique, specialized services tailored to consumer needs. Increased variety of services. With more companies entering the financial space, consumers have access to a broader array of services. These range from innovative payment solutions and personalized financial management tools to advanced lending platforms and wealth management services. Improved consumer experience. Competition drives companies to enhance user experience. Fintech firms often focus on user-friendly interfaces, seamless integration across platforms, and personalized services that traditional banks may lack. Cost reduction. Enhanced competition can lead to lower costs for consumers. New entrants often offer services at a reduced fee compared to traditional banks, leveraging technology to cut operational costs. Consumer protection and data privacy frameworks such as GDPR in Europe and initiatives by the CFPB in the US prioritize consumer protection and data privacy, ensuring that financial data sharing is conducted securely and transparently. Consumer control. GDPR mandates that individuals have control over their data. This means consumers must give explicit consent for their data to be shared and have the right to know how their data is being used. Transparency. Financial institutions must be transparent about their data practices. This includes clear communication about what data is collected, how it is used, and with whom it is shared. Security measures. Regulations require robust security measures to protect consumer data. This includes encryption, secure authentication methods, and regular security audits to prevent data breaches. Breach notification. In the event of a data breach, GDPR requires companies to notify affected individuals and regulatory bodies promptly, ensuring consumers can take steps to protect themselves. Economic efficiency and financial inclusion. In regions like Latin America and Africa, open banking regulations are designed to increase market efficiency and financial inclusion. Market efficiency. By standardizing APIs and fostering interoperability between financial institutions, regulations streamline financial transactions, reduce friction, and lower costs associated with financial services. Access to services. Open banking initiatives can bring financial services to underserved populations. For instance, mobile banking and digital wallets have become essential tools in areas where traditional banking infrastructure is lacking. Regulatory sandboxes. To mitigate compliance challenges, some countries have introduced regulatory sandboxes. These frameworks allow fintech startups to test innovative products in a controlled environment without incurring the full regulatory burden immediately. Regulatory sandboxes foster innovation while maintaining oversight and protecting consumers. Innovation encouragement. Sandboxes provide a safe space for fintech companies to innovate without the fear of immediate regulatory repercussions. This encourages experimentation and the development of novel financial solutions. Regulatory feedback. Companies participating in sandboxes receive feedback from regulators, helping them understand compliance requirements and refine their products accordingly. This collaborative approach ensures that new products are not only innovative, but also compliant with regulatory standards. Market readiness. By testing products in a sandbox environment, companies can fine-tune their offerings before a full-scale launch. This ensures that products are market-ready and have addressed potential regulatory issues. Consumer protection. Despite the relaxed regulatory environment, consumer protection remains a priority in sandboxes. Companies must still adhere to basic consumer protection principles, ensuring that innovative products do not compromise user safety and privacy. Section 3. Future trends and predictions. Global shift toward greater transparency. A global trend toward greater transparency and consumer control over financial data is expected to continue. Regulations similar to PSD2 are likely to proliferate in countries currently lagging in open banking initiatives. Integration of advanced technologies. The advancement of AI, machine learning, and blockchain technologies will drive regulatory evolution. Future regulations will focus on implementing these technologies to safeguard the financial system's integrity and customers without impeding innovation. Increased focus on cybersecurity. As financial services become more interconnected, the potential impacts of cyber attacks grow more severe. Future regulations will likely strengthen requirements for cybersecurity measures, including mandatory incident reporting, robust data encryption, and regular security audits. International cooperation and harmonization. With cross-border financial services becoming more common, greater international cooperation and harmonization of standards are expected to manage the risks associated with cross-border financial activities effectively. Incorporating sustainability. As attention to environmental, social, and governance (ESG) issues increases, financial regulators are beginning to incorporate sustainability into their frameworks. Future regulations might include requirements for financial institutions to evaluate and disclose the environmental impact of their investments and operations. Consumer protection. Consumer protection will remain a cornerstone of financial regulations. Future trends will likely involve stricter oversight of financial products and enhanced education initiatives to help consumers navigate the increasingly complex financial landscape. The regulatory frameworks shaping open banking are crucial in creating a more transparent, competitive, and consumer-friendly financial landscape. By understanding and adapting to these regulations, financial institutions and fintech companies can navigate the complexities of modern financial markets and seize emerging opportunities. As the global shift towards open banking continues, staying informed about regulatory trends and future predictions will be essential for success in this dynamic field.